Thanks so much, Navneet. It's always such a pleasure talking to you. And today's discussion is, especially interesting. The rise of investor nation, something that you and me have definitely aspired for many, many years, for 20 years. So what has happened? The mutual fund industry has definitely transformed over the last 5 years. It's like a pre-COVID versus post-COVID era. How do you describe this transformation? How much of this would you say is maturity, and how much of this would you call momentum?
Thank you, Malakshmi, and for HDFC MC. Such a pleasure to be associated with Moneycontrol in curating this thought leadership summit. I mean, we had one in Mumbai, and this is in Bangalore, and always a pleasure to be in Bangalore. People say that this is India's Silicon Valley. I think in my lifetime, hopefully I will see where many countries will have a city like that, and they will say this is our country's Bangalore in terms of innovation and the whole energy that this place has.
Cheers to that. Let's clap for Bangalore.
People crib about many things, but I have a strong belief that, and I've been saying for 10 years back, people used to say about the traffic, and I used to say that wherever there are like talented, energetic, enthusiastic, optimist people are there, there would be a network effect. More people will gather there, regardless of some of the challenges, because the opportunity is so big and the environment is so positive. On our industry, as Jeff Bezos said that we had a great quarter, but we would have worked for it for 10 years. So our industry journey over the last couple of years, where we have seen significant growth in terms of number of investors, number of folios, number of zip codes that we would have covered, the amount of AUM, the SIP book, SIP accounts, so on and so forth, would have been like years of hard work. And I mentioned it many times that I think the 4 factors that have driven this growth in the last couple of years, and we'll keep it short, I mentioned it several times before. I think one is a track record. Historically, the 2 questions that, and several fund managers are sitting here, several of my colleagues who have been like veterans in the industry sitting here on the sales side, typically 2 questions that you used to get asked during the bull market, abhi profit book kar le ya ruke? And start of abhi laga dein ya ruke? So it was always like, even in a mutual fund, you are investing for a year or 2 and just playing the market. And for years that was the case. Now I think investors can see a 30-year track record of several of our funds and some of the other funds. And I think they get confidence that volatility is an inherent part of it if you want to make good returns over a period of time. The second, technology has played a big role, and we have a session on that. I won't talk more about that at this stage. Our number of investors have doubled at HDFC AMC in last 2 years, and technology has played a big role in that. The third is the transparency. We take a lot of pride that our industry, along with market regulator, has worked very hard to make this product more transparent and most cost efficient for every investor. And last but not the least, I think the biggest role has been played by, just to create the acronym, track record, transparency, technology, and training, but that's the investor education. What India has done is something very unique. Very few places in the world have done something like what we have done. The whole campaign of Mutual Fund Sahi Hai, backed by deep efforts on investor education. And I think combination of these reasons has led to the substantial growth we have seen. But these are very early days. We can pat on our back by saying that, number of investors have grown, AUM has grown so much. At HDFC AMC, we manage more equity AUM than what the total industry had till few years back. But we have a long way to go, long way to go. This is just beginning.
True that. So my question was, how much of this is maturity, momentum? You definitely, from your answer, I gather, much of it is maturity.
I think resilience of domestic investors, you have to give it to them. There's a lot of maturity, a lot of resilience. Our distributors and the advisors have played a very big role. People like you in media have played a very big role, and of course, efforts of the industry in terms of keep communicating the message that you are investing for certain goals, you are investing for the long term. Keep focusing on the asset allocation. Discipline is more important. And I think that message is resonating. You can see last couple of years, people have been telling me people have only seen bull market. They haven't seen a severe correction. But think about it. The SIP book was 4,000 crores in 2017. Then it became 8,000 and then 16,000 and 29,000. In this period, you have seen significant rise and fall in mid and small caps in like that 18-19 period. You saw the COVID where you had 30% drawdown in a single month in the month of March. You saw a lot of volatility in 2022. You have seen like last 1 year, not only in like small and mid caps, but overall market. But the SIP numbers, both in terms of number of accounts and the AUM, is increasing month after month. I think that shows the resilience of the investors. That shows the maturity of Indian investors.
Sure, I agree to the point that, continuously, I mean, what we feared that every market correction will be followed by redemptions is no longer true. But the data that we see on investor, portfolio churn, that still seems like a very immature investor behavior. The stay of investors in a fund is still only 2 years. And there is not one single fund manager or fund house that is not shouting on top of the rooftop that you have to take at least a 5-year view. Nowadays, people also say a 7-year view. Despite that, the data shows us that investors are not patient for more than 2 years. So what do we gather from this whole thing? Is it that they are driven by performance? Is it because they're constantly looking at which is the next, for the next 1 year, where should I put money based on last 1 year? What's your thought?
No, it's a journey. From our interaction across the country with investors and distributors, we can clearly see a more maturity. We can clearly see investors investing for long. Again, it's a journey, right? I mean, after 100 years in the United States, people would be chasing momentum on many things. I mean, you can see the ETF flows globally, not only in India. I mean, they only pick up, the ETFs in, let's say, a gold and silver fund, they only pick up when the asset class has done extremely well. There is a recency bias, which is very inherent among the investors. There is a bandwagon effect. Having said that, I see that maybe thanks to the efforts of everything that I mentioned before, more maturity among the investors and even the advisors and distributors. Everybody I meet, everybody has been advocating for remaining invested for longer term rather than keep chasing the short term performance.
No, good you touched upon this gold, because it is indeed true that it's only in the last few months that, when gold started doing so well, not that it has not done well in the last 3-4 years, but that you saw so much money coming through the ETF route. On the contrary, in India, so much so that Uday Kotak said that, Indian housewives are smarter than everyone else. But the fact is, gold did not perform for 20 years. And, 4 or 5 years of performance has actually, it's changed the complexion of 25-year returns in gold now. And the thing about gold, at least taking India's example, is that people don't sell gold because they're so emotionally connected to gold. You just don't want to touch your gold. Is there a way for the mutual fund industry to really connect with investors to gain their emotional loyalty so that, they stop chasing performance? Or is it too idealistic? Or is it even a bad idea? Because we're always told that you should never get wedded to your stocks. You should not be emotional with financial decisions. What's your take?
It's very interesting. A lot of people talk about the wealth effect India would have because of the rise in gold and silver prices. And my view is that unlike other asset classes, gold and silver doesn't create the positive wealth effect in India. And it's very interesting. May sound very counterintuitive. Because when gold and silver prices are going up, regardless of the amount of gold and silver you have in your house or locker, you feel poorer. You know why? Because you think that I'm going to buy more.
Yeah.
And I have to buy more. And my next purchase is going to be higher.
Costlier.
You don't feel positive and go and spend that money. If you own stock and the prices have gone up, people spend that money somewhere else, even if they have not realized that gain. If you have an additional real estate other than your house, prices have gone up, people spend that money in some manner because there is a positive psychological positive implication, but in gold and silver it doesn't happen. Maybe as the holding goes up in the form of ETFs and gold fund over a period of time, this will have that wealth effect. The other thing, we really need to think hard. How do we really get that gold and silver into the productive uses? It's a couple of $1 trillion of gold and silver which is unproductive for the country. And there should be a way of like, I'm just thinking aloud, that if we allow that gold and silver to be sold and put that in equity, and let's say you say maybe an ALSS with 5-year lock-in and no tax, I think there was possibility that a lot of people monetize that and put that to a more productive use, which will be very good for the country.
You
And
think
I
people
hope it
will
happens.
swap their gold in today's environment to equities?
I think so. So equity is cheaper per ounce of gold, isn't it? And per ounce of silver, it's cheaper today than what it was 6-7 years back.
No, I take your point.
But I've said this just a couple of days back that those who are saying that gold and silver can only go up, go back in history. There have been long periods of underperformance. Between early 80s to early 2000s, there was a 20-year bear market. Prices fell from $800 to $230 per ounce, and then it started rising. I think there have been like many of those periods, yeah.
So that is why I was asking that, is there a way, I mean, is there something for us to learn from this emotional connect that people have with gold? People don't have that connect with equities, or for that matter, mutual funds, because that is why...
It's changing. Don't underestimate what's happening.
What
in
was
India
it?
today.
Numbers don't
I
show.
have a very strong view. I've quoted this many times. We have spoken, Mahalakshmi. This nation is transforming from a nation of savers to a nation of investors. A nation of savers is transforming into a nation of investors. People are a lot more optimistic. People are a lot more aspirational. People are more ambitious. People want to create wealth. And they are exploring many things today. There are people who are doing F&O. There are people who are on gaming apps. There are people who are trying IPOs. They are trading stock. They are investing in mutual funds. They are doing all kinds of things. But it just reflects that everybody is like looking to create wealth or looking to make more money. And I quote this often that in the long run, how much wealth you have doesn't depend on how much money you make. How much wealth you will have in the long run doesn't depend on how much you make. It depends on how much money your money makes. And I think more and more Indians are understanding that. In HDFC AMC, we had this interesting campaign a couple of years back called Barni Se Azadi. Because every Indian housewife would have few hundred rupees or tens of rupees historically in that Barni. In the kitchen jar. And I think what we need to do is to kind of motivate them, inspire them towards putting that money to the productive use. This is a revolution which is underway. Don't underestimate it.
Okay, not underestimating, but any concrete ideas or any a different way this messaging about investing for the long term can be made? Is there anything that you at HDFC, AMC, or the industry is working on? For example, one thought I have is that, you know, in the end, everyone talks about performance, whether it is the investment advisor or the investor or even the fund managers or the AMC. You know, everybody asks this question, everybody is interested in this question, and that is why, in the end, the investor behavior is also governed by that. Do you think it's a good idea to move away from this kind of disclosure or return, you know, time periods for which we display returns and so on? Because in the name of transparency, we share a lot, no quarrel with that, but that is also sort of reflecting in investor behavior.
I mean, we disclose everything, right? Right from 1 year to like since inception. And I mentioned earlier that several of our funds have been in existence for 30 years. They have a performance track record of 30 years. And more people, and again, every time we talk about 30 years, we say mutual funds are subject to market risk. Please read the offer document carefully. Past performance is no indication or guarantee of future performance. Having said that, that gives them an understanding that in between there would have been many economic cycles, business cycles, profit cycles, market cycles, political cycles. But India is a compounding story. Other than United States, there are very few places in the world which are a compounding story like India. Over a 30-year period, your nominal GDP grew at, I think, 10, 11%. Corporate revenues and profits grew slightly higher than that, and market capitalization grew slightly higher than that. An economy which grows at a very decent rate for such a long period, a corporate sector which can convert that growth into their revenues and profits, a market which converts that growth into the returns for a minority shareholder, and a mutual fund industry which converts that growth for somebody who's investing only 500 rupees per month. That hasn't happened in many countries in the world. In India, it has happened. There's no reason to believe that next 30 years that won't happen. And I think more and more people look at that aspect. I think more confidence will get built in. We are not selling returns of 30 years. What we are selling is the concept that over a period of time, India is a compounding story, and it makes sense to remain invested in a highly disciplined manner. I think in the earlier panel, you talked about many things, manufacturing, I think whether services and all kinds of things. If you look at the larger forces in India today, the bigger forces are the digitalization of the economy. Within that, digitalization of finance. And both these helping, and with many other things happening, is the formalization of the economy. All of this together leading to financialization of savings. And a very interesting thing happening is financialization of assets. So you have, whether it's real estate in form of REITs, whether it's infrastructure in form of InvITs, whether it's gold and silver, which is in the ETF form, so on and so forth. And all of these are like reinforcing each other, and they're like very, very powerful forces.
Oh, absolutely. In fact, if you went back, even 15 years or 20 years, there were just equity and debt and hybrid. And today you have funds of all shapes and sizes, but not within these asset classes. You can take exposure in REITs, except that there are only 5 REITs available, and I hope that market grows. But for all practical purposes, every asset class is now represented or you can participate through the mutual fund route. So Navneet, if you just look into the future, let's not go too far, let's say 5 years, what do you see will be the complexion of the mutual fund industry? And is mutual fund enough for a family? I mean, for you to put all your money, is that one vehicle good enough to keep your entire pool completely diversified?
Yeah, so the industry has moved from like a product-led to a more solution-led. And you have like all the solutions, right? A family may have need to like park some cash surplus for a few days or weeks. You need income, so you have products for that. You need like long-term wealth creation, you have products for that. And over a period of time, you'll see more solutions emerging for all kinds of investors.
And how do you see these alternate, for example, now international investing through gift cities coming up? We spoke about the SIF category that has come up. SEBI has, the taxation around REITs has been revisited. How do you see these pockets really growing? And how do you see the overall composition of the industry itself changing over the next 5 years?
So sure, I mean, we are the 4th largest economy in the world, 4th or 5th largest market in the world. This is an entrepreneur-driven economy rather than a state-led growth like some of the other places. All of these markets will grow tremendously. Several times I mentioned that there are striking parallels between 1980s in US and now in India as far as asset management and wealth management industry is concerned. You can go and see the playbook. You can go and see the growth of various segments. So everything will grow here. Active funds will grow, passive funds will grow, private equity will grow, venture capital will grow, real assets will grow. I mean, you will see like growth in almost all of these segments the way you have seen in US from 1980s onwards.
Okay, I take that everything will grow, but today, you look at...
And international also. I tell you interesting about international. So before early 70s, the US institutions were not investing outside US. And then all the classical theories that don't put all your eggs in one basket, you need to have international diversification. So over a period of time, they started diversifying quite a bit. I mean, quite a bit meaning still because US has always been a large part of the global market, but still within that, they started diversifying. But for 30 or 40 years now, anybody who diversified internationally has underperformed because the US markets have ended up outperforming. Having said that, there would be need. A lot of Indian investors would like to take exposure to other markets than India, and I'm sure there would be products, and Gift City is a good vehicle, yeah.
So how do you will these new categories Could they become 50% of the AUM in the next 5 years? Do you see something
What new
dramatic?
categories like
I'm
your...
saying, for example, gold ETFs. Can they be a really big?
So
Because right now momentum is with gold and silver. Of course, they corrected
it will
also.
be
So
a
I'm not
dream
so
for the
sure.
industry because not that of our overall AUM. Look at the size of the gold in India.
Yeah.
A large part of that becomes financialized and gets fractionalized and whatever, tokenized and get traded and come to the more mainstream system where it can be leveraged for the overall growth of the economy. It will be good. If you look at the household balance sheet in India, 50% is real estate, 15% is gold, 15% is bank deposits, equities is less than 6%. This number was 2.5% 10 years back. So 2.5 has only gone to now a little over 5%. That has a much longer way to go. And on a lighter note, whenever people ask me about the future of alternatives, I say that the whole country has invested in alternatives, which is real asset and gold. The mainstream traditional asset class equity, they are yet to invest.
No, I take your point on growth, but the reason I'm asking you this question is because today, if you just look at the macro picture, market cap to GDP for India is 130%. I mean, it's the highest in the world. So it should tell you something about where we are in the equity markets. And are we, by sort of saying that, okay, now we have 6% or 7% of households invest in mutual funds, but 20% are in financial markets. Is this a point where that we need to pause and look at other asset classes, which, all these years we have been, our mindset is to think that, equity will do well in India. But today, with the market cap to GDP at 130%, is there a need to sort of temper that kind of optimism?
So there are opportunities across asset classes. So we talk about mutual fund AUM growing as a percentage of bank deposits over the last 10 years. But between 2016 and now, fixed income and money market AUM as a percentage of bank deposits has actually gone down. Bank deposits have grown faster than the fixed income and money market AUM in India. But that shouldn't have been the case. I mean, the same forces that I talked about earlier. No, it's same. It's still, it's a lot more convenient and efficient as far as mutual funds are concerned. So there are like lots of avenues for the industry to grow.
Okay. If you were to tell us, 2-3 thoughts around what is it that you wish the industry did differently? Is there anything that you feel concerned about and you wished that it changed?
No, I'm very happy that your title is decoding purpose, product, and tech, right? For the conference.
Yeah.
Putting purpose ahead of everything else. This is very critical. And in the last, like in Mumbai, we discussed, this is the most noble profession in the world. This is the most noble profession in the world when you're dealing with somebody else's money. And that purpose has to be at the center of everything that we do. Client services is the only patent that an organization can have. And as far as we remain highly focused on that, everything else will fall in place. India is an incredible compounding story. You aren't seen nothing yet. We are going to be the most, how do I put it? India will create an economic miracle which is unparalleled in human history. Because our growth will be more democratic, more inclusive, more equitable, and more sustainable. Not many countries in the world have achieved something like that in this century. But I think the opportunity for us is very large. At the same time, we have to ensure that we keep building the trust of the investor, trust of the ecosystem. We get, every business gets a license to do business from the society. We have to constantly keep thinking, what is the social utility of my business? What is the social utility of my industry? And as long as I'm adding value to the society, society will give you a license to make reasonable revenue and profits and will give you the avenue for growth. I think the only one thing we have to remain focused is we don't do anything which breaks the trust of the investor. I've seen 92 bull market. I've seen 85. I've seen 92. I've seen 99, 2000. I've seen that 2007, 8. I think various points in time, there would have been something in the capital market which led to maybe wavering of that trust. What we need to ensure this time is we don't do anything which makes trust wavering of the investors. The opportunity is so large. We've still got 5.5 crore investors. Imagine where we can be in 10 and 20 and 30 years' time in our lifetime.
True that. On that supremely optimistic note, thank you so much, Navneet. As usual, pleasure talking to you.